You better buckle up, folks, because in today's video, we are going to go through the top 5 AI stocks for massive growth in 2024. Now, these stocks all have either clear catalysts, clear events coming, relentless momentum, a clearly uptrending business model, or other clear reasons to be bought. Some you've heard of, some you haven't, some are big, some are small, but all are extremely solid AI picks. I'll present each ticker, what price I believe each are good deals at, and then you need to go off and do your own due diligence and form your own opinions. Remember, even the best stocks go up and down in cycles, and so if you aren't employing smart risk management and doing your own research and preparing yourself, well, you're simply going to get hurt. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that ravishing like button, and also don't forget to subscribe. Also, make sure to let us know what your favorite play ideas are in the comment section down below. Let's go ahead and start with number 5, ADBE, Adobe. Now, you probably don't think of Adobe when you think of AI stocks, but it is actually one, and it is one of the most unique. It's increasingly a player in what's called generative AI. You probably know Adobe for Photoshop or a number of its other products within its Creative Cloud, but Adobe just introduced Adobe Firefly, which has really put it into the ring of AI leaders. Adobe Firefly is a tool designed to empower creatives by making it faster and easier to explore, create, and iterate designs through the Firefly web app. It enables the generation of new graphics, color combinations, image expansions, and text effects in Adobe apps like Photoshop and Illustrator using simple text prompts. I've been using Adobe Photoshop myself for years, and quite frankly, you can tell that I make all these thumbnails myself, and I only really know how to do the basics. And something like a Firefly can help non-savvy users like myself design things they're envisioning without having to learn all the really complicated technical stuff that many of us have no patience for. Now, Adobe says users have already generated millions of images using it since its launch last March, and it's likely, in my view, to expand dramatically in coming quarters and years. In terms of the overall business, Adobe Creative Cloud subscription base has grown impressively to over 33 million paid members, demonstrating Adobe's strong market position and the widespread adoption of its services among creative professionals worldwide. Very well-known and established brand name that shoots out profits. Adobe reported a record revenue of $19.41 billion for the fiscal year 2023, making a 10% year-over-year growth. This fourth quarter alone saw a revenue of $5.05 billion. Their digital media segment, including Creative Cloud and Document Cloud, was a significant growth driver. Adobe just reported generating $7.3 billion in operating cash flows during this previous reporting year, showcasing its financial robustness and operational efficiency. So what exactly is a good price for Adobe? ADBE? Well, ADBE is in a nice sell-off right now, going from $638 to $530. I would argue anything at that key $495 level and below is a solid deal. In the 500s, you're okay, but above 600, you're eating too much into your upside. The average analyst price target for ADBE is at $653. And if you're below 500, you have some 32% of upside just to get to that analyst price target. So if you're looking at this stock, you want to get it somewhere at that key $495 level, if not below. Number 4, CRWD, CrowdStrike. Now, CRWD is on a nice dipperoo, making it super relevant right now for dip buyers. This company is a renowned cybersecurity technology company that has made a significant mark in the field of cloud workload and endpoint security, threat intelligence, and cyber attack response services. Founded with the mission to reinvent security for the cloud era, CrowdStrike developed the CrowdStrike Falcon platform, which is a cloud-native intelligent security solution. This platform is designed to detect threats and stop breaches, positioning the company as a leader in the space of cybersecurity solutions that protect and enable the technologies driving modern enterprises. With more and more complex software and technology and AI, well, you have more and more complex vulnerabilities, and CrowdStrike is helping solve that problem. The company has experienced substantial growth and recognition over the years. CrowdStrike's growth is also evident in its funding rounds and valuation increases over the years as well. Before going public, the company raised a total of $480 million through various funding rounds, with significant investments from Google in its Series C funding round. By 2019, CrowdStrike's valuation surpassed $3 billion, highlighting its rapid growth and the confidence investors have in its business model and services. In terms of its very well-known contributions to cybersecurity, CrowdStrike has played a crucial role in investigating high-profile cyber attacks, including the Democratic National Committee cyber attacks, and has been actively involved in identifying and mitigating threats linked to Russian intelligence services, making it one of the top companies people think of today when they think of cybersecurity. Financially, and what's really the most important here is that CrowdStrike has shown remarkable performance as of the latest update. In terms of the latest earnings report, while CrowdStrike reported 35% increase in year-over-year revenue, 148% increase in net income, 145% increase in diluted EPS, a 135% increase in net profit margin, a 105% increase in operating income. The company's focus on cloud-delivered security solutions, its successful track record in stopping breaches, and its continuous innovation in cybersecurity technologies make it a notable player in the market and one that you need to have on your radar. What's a good price to buy though, Charlie? According to NASDAQ.com, 44 analysts rank CRWD as a strong buy, and while the price target is at about the current price, the truth is that analysts tend to rush to upgrade the stock as it reports beats, and it's scheduled for another report on March 5th, which I believe it'll beat on again, and most likely, I think you're going to see the stock go up a lot more, just as all the other companies in the similar sectors and in related sectors have gone up after their earnings. Not all of them, but most of them, right? So now is an interesting time to check out the stock. Number 3, SoundHound AI. So SOUN is a leader in advanced voice-enabled AI technologies that enhances user interactions across various platforms. SoundHound AI stands out with its voice AI technology, particularly in solutions like their restaurant ordering system, automotive solutions, and various other voice assistance markets. There's a lot of competitors in this space, but their system stands out specifically because of its ability to understand very, very natural human voice. And SoundHound AI recently came into the spotlight again because of the revelation that NVDA continues to hold a big stake in it, and the two have a very, very long history. NVDA was one of its early funders, and NVIDIA's belief in SoundHound AI underscores a strategic alignment between the two companies, particularly in leveraging NVIDIA's advanced GPU technology for enhancing SoundHound's voice and AI capabilities. This collaboration shows SoundHound's unique position in the voice recognition market, and NVIDIA's support emphasizes the potential they see in SoundHound's technology and market approach. So what's a good price for the Sound of the Hound? Well, average price target for SOUN, according to TipRanks, is at $4.67. My take is it'll be able to climb way, way higher than that, but it's going to take some time and there's going to be cycles. Right now, SOUN is on a momentum cycle, which is unlikely to take it below $3.50 again. Once you get a big panic sale, though, you'll certainly get to that. But until then, this current momentum is going to take you to higher and higher highs, and that's probably going to last a few weeks at least. My suggestion, tight stop loss if you're playing momentum right now, or simply wait until the next downturn for a good dip buy. The beautiful thing about the ebb and flow of markets is you always get opportunities to benefit from euphoria and dysphoria cycles, and with this stock, it's no different. With this stock, you have a lot of upside over the long-term time horizon, and you have some short-term momentum to play off of as well, and you're going to have some short-term dips to get an even better deal at as well, which means this stock is a win-win-win for everybody all around. Number 2, Palantir, PLTR. Now, Palantir, in my view, has a big chance of becoming a mega cap one day. In an era where data is more valuable than gold, Palantir technology stands to make a killing. Palantir harnesses the power of AI to unlock the mysteries hidden within vast oceans of data. With a long and lucrative track record of using its software to help government and commercial sectors to make more informed decisions, Palantir is not just any stock, it's a gateway to the future of technology and security. Now, hyperbole aside, look, folks, Palantir serves a diverse clientele, including major defense institutions like the U.S. Army and commercial giants such as IBM and Amazon. With 149 major customers across government and commercial segments, Palantir's platforms, Gotham and Foundry, are utilized across more than 40 industries worldwide. Obviously, it's very, very difficult for folks like you and I to understand all the complexities that go into big data analytics, but when we're looking at it from a business perspective and we're seeing all of these major institutions using their platforms, well, that's enough proof of concept for us. You look at the actual numbers, Palantir has shown very, very impressive growth. They've got a growing list of clients and a strong pipeline of both government and commercial contracts. Palantir's revenue streams are both diverse and robust. A lot of people complain about their government streams, but quite frankly, I mean, if you look at the overall cold hard math, the overall picture, Palantir is growing rapidly with $2.23 billion in revenue for 2023 and a notable 70% increase in U.S. commercial revenue from Q4 2022 to Q4 2023. Well, Palantir demonstrates nothing but insane strength and growth and an exponential trajectory. The company's robust partnerships and $305 million in adjusted free cash flow, coupled with $3.7 billion in cash reserves and no debt, underscore its solid foundation and growth prospects in the AI domain. Growth aside, when you're seeing a company with $3.7 billion in cash and cash reserves and equivalents and no debt, well, you're seeing a company that's responsibly run and ready for bad periods of economic hardship. Now, in terms of price, we've been covering Palantir for years, and I've said Palantir is a good deal to buy at almost every price area possible, during big dips, during big rallies, during stagnation. And the reason for this is because I see the long-term trajectory this company is on, and I believe that really even at all-time highs for the stock, the company is going to be trading at many, 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 many multiples higher. I made a video a few weeks ago on where I see Palantir going in the short term, and by the start of 2025, I see it at $51. But over the coming years and coming into the coming decades, Palantir, in my opinion, has a strong shot at being a mega cap. But if you're looking at short-term momentum and you're looking out into 2025, well, I believe that it's going to be at $51. So with that in mind, in my opinion, at $25 or below, you have more than a double in upside potential. At below 20, even better, right? So if you really want to be very, very cheap on this one, I would argue below 25 or below 20. Okay, now number one, NVDA. So there is perhaps no stock in the market with more actual real-day success and future growth potential in the AI rush than NVIDIA. NVIDIA is essential for AI because its GPUs offer the computational power necessary for deep learning and AI algorithms, enabling faster processing of large data sets. This capability is critical for training complex neural networks, making NVIDIA a cornerstone of AI research and development across various industries, which are booming right now. In terms of formidable competition, there really isn't much. I mean, NVIDIA holds an approximate 87% share in the GPU market, far outpacing competitors like AMD and Intel. Now, one of the biggest mistakes that people have been making for the last year plus with NVDA stock is looking at its price and the insane trajectory it's been on and assuming that it's an unjustified hype stock that should be shorted. While hype certainly plays a role in NVIDIA's rise, well, the problem with assuming that NVIDIA is all hype is that its profits are simply rising way faster than its stock is. The truth is, folks, that our economy, whether you acknowledge it or not, is in the middle of a fundamental shift where more and more corporations need to adopt to AI or die. And that's only going to get worse and worse and worse. And NVIDIA's PE ratio has been going down since mid last year despite the stock's rapid rise, simply because, again, the profits are rising way, way faster than the stock can adjust. So as fast as NVIDIA stock is going up, it's quite frankly just getting cheaper. If you look at this chart from Bloomberg, it shows that you're getting more earnings than you have in many points in the last year for every dollar of market cap. At the earnings report yesterday, NVDA reported that quarterly revenue reached a record $22.1 billion, a 22% increase from Q3 and a 265% surge from the previous year. That data center revenue achieved a record $18.4 billion for the quarter, marking a 27% rise from Q3 and a staggering 409% growth year over year. That annual financials, full year revenue soared by 126 to $60.9 billion, with GAAP EPS up 586% and non-GAAP EPS up 288% from the previous year. That gross margin improved to 76% in Q4 from 74% in Q3 and up significantly from 63.3% the previous year. That net income, Q4 net income jumped to $12.3 billion, a 33% increase from Q3 and a 769% increase year over year. That earnings per share, GAAP diluted EPS for Q4 was $4.93, up 33% from Q3 and up 765% from the previous year. So the problem right now is a lot of folks in the market are still looking at NVDA and they're saying, wow, this 275% increase in stock price year over year is simply not sustainable. The problem is that a lot of its underlying metrics are up a correspondingly larger amount. When your net income is jumping 769% year over year and expected to continue ballooning, when metric after metric after metric suggests more and more exponential growth, well, it's very, very difficult to say that a 275% valuation increase isn't going to continue to see upside. Nobody is going to say that it's going to continue rallying 275% or 400% or 500% a year. Of course not. There's only so many trillions in market cap a company can get. But when you're looking at a company like NVIDIA and you're thinking it's going to top out now and never go up again, and then you're looking at all the potential profits it can make if AI continues to balloon, well, something's got to give. And what's going to give is that NVDA over the coming years and especially over the next decade is going to hit newer and newer and higher high. It's just simply going to have big dip cycles in between. So if you are looking for an AI stock to really benefit from this massive economic shift we're seeing right now, well, NVDA continues to be one of the biggest. Now, with all of that aside, that doesn't mean that it's okay to chase. Let NVDA's momentum take a breather. There is no rush here. My view on this is it's best to accumulate stocks like NVDA slowly on dips and simply enjoy the momentum with clear risk management and a clear time horizon. If you're somebody playing the short-term momentum, have very, very tight stop losses and just lock in profits as it goes up. Even if you believe a company is going to 10x in the next 10 years, who cares? Buy it slowly on dips. Why are you in such a rush? That is my viewpoint. NVDA, again, I get that it's up a lot, but if you look at it by many other metrics, it's cheaper than it has been in other points of the last year, and by quite a lot. So make sure that when you're looking at a company that's going up, look at the underlying numbers and see if it justifies it. With NVDA, yes, there's a lot of hype pushing the stock up right now, but if you look at the valuation and you look at how fast its underlying business is growing, well, there's a lot of reason for that hype. And if you look at what it's likely going to be doing in the coming years, there's a lot of justification as well. So things to think about. And there you have it, folks, the top 5 AI stocks set to dominate in 2024. From Adobe's innovative leap into generative AI with Firefly, through CrowdStrike's unwavering commitment to cybersecurity, to SoundHound AI's groundbreaking voice technology, to Palantir's data analytics supremacy, and topping it all off with NVIDIA, well, you got a lot of companies to look over today and do your own due diligence on. Let us know what your favorite stock is down below. And in conclusion, quick plug, what broker should you trade these stocks on? Well, thank you for asking. That brings us to today's partner, Moomoo. Moomoo is a powerful platform that delivers speed, reliability, data, and a vast amount of trading tools and analytics. Whether we are talking about real-time market data, level 2 financial news and analysis, advanced charting tools, smart alerts, and more, well, Moomoo offers a ton of features that are essential for any active trader and or investor. Moomoo's interface is also really easy to work with. We've been recommending them for years and have a great relationship with them because of how many times and how many people we've sent over to them. And we've arranged it so that if you use our affiliate link down below while this promotion is going on, you'll get up to 15 free stocks, a 5.1% base APY on uninvested cash, and a 3% extra APY for 3 months. Pretty nice incentive there to try out a free broker, and you can check them out with that first link down below. Anyways, folks, have a great rest of your day, and we will see you in the next video. We appreciate each and every single one of you. Make sure to hit that ravishing like button and subscribe, and we'll see you next time.